Hey everyone, welcome back to POA for you. It's Leroy again, and today I'm going to talk about Contra accounts. This is at the request of Isaac, who's asked me to summarize some of the Contra accounts that are relevant for N and O level students. So, Isaac, I hope this is helpful for you, and for the rest of you watching, I hope it benefits you as well. So, let's get right into it. Now, one of the characteristics of contra accounts is they belong to the same family as the main account, but they work in opposite directions as the main account. So if the main account is debit in nature, then the contra account will be credit in nature because it's supposed to reduce the balance of the main account. And the other characteristics of it, when you look at it in the financial statements, they are always presented as in the same group. And I'll show you with some examples very soon. Now let's look at where we see contra accounts, right? So one of it is in the statement of financial performance. There's only one set of contra accounts that we see in the for N and O level students. It's sales revenues, and the contra accounts will be sales returns. So sales revenues is credit in nature. It's a number that represents how much you sell, how much goods you have sold to your customers, and sales returns is debit in nature, and it represents how much goods your customers has returned to you after you have sold them something. So this too has to be to get your net sales revenues in your statement of financial performance. You have to take your sales revenues less your sales returns. So that's one contra account that you will only see in the statement of financial performance, and they should be presented together. And I'll show you that also in the next few slides. Now, the next thing, in the statement of financial position, what are some of the contra accounts? The first one is non-current assets. So this is your motor vehicles, your equipments, and your office equipment, your fixtures and fittings. And the contra account will be the accumulated depreciation for those non-current assets. So non-current assets is usually presented at cost. So if you buy a motor vehicle for $10,000, that's your motor vehicle cost, and that will always be the cost of your motor vehicles regardless. And if you didn't buy additional motor vehicles, or if you didn't sell any motor vehicles, then that $10,000 will be presented in the statement of financial position. And accumulated depreciation just represents that bit of motor vehicles that's charged to the statement of financial performance in the form of depreciation expense. And accumulated depreciation is actually, like the name suggests, and whatever that's been charged from the year that you bought the asset till today. So if it's been like 5 years, then that accumulated depreciation will be representing 5 years worth of depreciation that has been charged. Now, if you take the cost of the asset less the accumulated depreciation of the asset, then you will get net book value, which represents the remaining value of the asset after you have taken away the accumulated depreciation. Okay. Now, of course, this is debit nature and this is credit nature. Okay. Now let's go. Trade receivables, a current asset, therefore debit nature. The contra account is the allowance for impairment of trade receivables. This is done out of prudence, right? Because in the trade receivables, if there's a portion of trade receivables that you think the customer can't pay you because the customer is non-contactable, and so you would make an allowance for impairment to bring down the net trade receivables. Okay. Next, capital and drawings. Now, in sole proprietorship business, you have a capital account, and then any capital would represent whatever the sole proprietor has brought into the business as initial funding. Now, if the sole proprietor has taken out some of the funding in the form of let's say if you've taken out inventory, if your sole proprietor has taken out cash or has asked the business to pay his or her personal expense on behalf, then that's called drawings. And that's really in line with the accounting entity theory, where the owner's personal expense and the business expense has to be separate. So let's look at how these contra accounts are presented in the financial statements. Right, so next, in your syllabus outline, and you could Google this, whether it's O or N level students, you would see in the appendix of your syllabus outline the format for financial statements and many more useful instructions. So please go look at those. You would see that sales revenues and sales returns are opposite sides, but grouped together to get net sales revenues. So it's always sales revenues less sales return. These two items are your first two lines of your statement of financial performance. The other contra accounts that we see in the financial statement of financial position, the first one is for non-current asset. You have the cost less the accumulated depreciation, and you will get the net book value. The next one, trade receivables, less allowance for impairment on trade receivables, right? And the last one is capital. Now, before the syllabus were updated, capital used to be presented, or owner's equity for sole proprietorship used to be presented differently. But now, since 2021, you guys are asked to present it in this format where you have the beginning capital, where you have the beginning capital, let's say it's 100,000 plus profits for the year 15,000 less drawings, let's say 5,000, to come up with an absolute number of 110,000, for instance. So if you see these drawings, they work in opposite direction as capital because it reduces the capital number. Reduces the capital number. Okay, now that's it. I hope this has been helpful for you guys. And if you guys have any questions, email us here, poa4u@gmail.com, or you can ask me a question via my channel. Hope this is helpful, and good luck for the exam, guys. Remember, practice, practice, and practice. Take care.